Attendees are in listen-only mode.
Hello, this is Ron. Can you hear me? George?
Yes.
Let's see. I'm looking for
I'm seeing the questions and somebody says, I can hear you. Phil Cox just said yes.
Okay, would it be under, yes, Phil. Okay, I see Phil.
Yeah.
I was looking, sorry for the delay there. I haven't done one of these webinars for a while, and I'm getting back into it. I'm going to see if I can detach this box, and we'll get started. Well, that's all right. Okay, anyway, as I mentioned a few seconds ago, I haven't done a webinar for a while. Most of you, or many of you know, I know, and you know I've been dealing with some health problems, but I feel great, and I'm planning to do these webinars live again once a month, and that is, I'll be taking a break. I'm scheduled, well, I'm not scheduled, but I'm getting close to the point where I'll be able to have a stem cell transplant, and that will keep me away for a few weeks because I'll be in the hospital. Now, that isn't guaranteed yet, but I'm going under that assumption. But anyway, that is in the future, and this is now. So we're going to talk about now. And there is a PDF file for you to download. Jim says he can't connect to the handouts, George. I don't know why, but it's simply a PDF file, and I'm going to click on it, and it came right down for me, as you can see. That is downloaded, and it should come down for you just like that, and then you can download it. This PDF is just what I'm going to be discussing during this webinar presentation. Now, the first part of the presentation, I just have to show you some things. I have to prove some things to you. And it may get a little complex. And I don't want to lose you during that part of the presentation, because where I'm going from here is I am going to go into my warehouse views, or where I'm going after I do the first part of the presentation is we're going to get into the featured bullish prospecting scans. And there is some new material in here that I've been working on. And this is where I want to go after I show you some history of these trades and so on. So I'm not going to be answering any questions during the first part of this because I have to concentrate on what I'm doing, or I will get totally lost. So I'm going to move this to my other window, and I'm going to go ahead and we're going to start looking at actually, let me bring this back over. Sorry for, like I said, I haven't done with these for a while, but I'll get organized. Anyway, this is just an example of the spreadsheet I use to determine risk. And anybody who's taken my online webinars has this spreadsheet. But those of you who haven't, you can figure these formulas out yourself. But what it does is it allows us to determine the percentage risk based upon the high, the low, and it also allows us to determine where the stop is, and the position size, the amount of risk that you're willing to take in a trade. Now, you should never trade without knowing your risk. If you do, it's going to be extremely painful, because what happens more often than not, if you have no idea how much you're willing to lose on a trade, you're just going to let a trade go. And that becomes very, very painful. I can tell you, I've been there, and it's not a good feeling. Now, as an example, I want to go back in time here, and I'm just going to go into my designer, and I'm going to arbitrarily pick a top 50 group inclusion report from earlier this year. Let's go all the way back to February, for example. And I have not looked at this folder. And I'm going to use what we call the group performance analysis. And it's going to look at the performance of these stocks over here. Let's see if there's any stocks that, it looks like there's a lot of gold stocks in here and so on. Well, Facebook's in here. I'll go ahead and use it since I said I was going to do this arbitrarily. And I'm going to click on this dollar sign up here. So the date is the 6th of February. So that means I would have to start with the group performance analysis using the 7th. I want to make sure that I do not have a filter on because that will mess me up. Okay, so it's the opening price on the 7th of February going through, I'm going to use today's close because I'm using data which I just updated from intraday. So let's see how this group of stocks performed during that time period, or the group of stocks in the top 50 group inclusion report. So I'll just click on GPA. This is nothing you ever have to do. I am just using this for illustration. Now you can see that looking up here, the top 50 group inclusion report only returned 3.3% and the S&P returned 6.2%. There are 25 gainers and 25 losers, but you can also see that there have been some tremendous winners like KEM, WB, CC, and so on, if you look over here on the right-hand side. But I'm more interested in looking at these down here because we're talking about risk. Here's one, CYBE, and the date of this was the 6th of February, and we're going to look at CYBE. Here it is right here. And why was it included in the top 50 group inclusion report? Because if I put my crosshair on here and I bring up this information window, here it was right here at the very top of its run up. This is why it's in the top 50 group inclusion report. And this is why we determine risk. If we're going to take this trade, we better know where we're going to get out. Because if we don't, this is what could happen with any trade. And the not having your risk parameters or your stop in place, whether it's a hard stop or just an alert where you know you're going to get out, it's just insanity to trade that way. Because this at the time, if you look at this, was a $39.65 stock, and today it closed at $15.35. Now I can take a lot of small losses, but I cannot take these big hits, and neither can you. So before you start trading, or if you are trading now, you just have to determine your risk, because anything like this is extremely painful. And not only that, it's discouraging. You won't be trading very long if you don't control your risk. That's all there is to it. Now, I'm going to move on. I'm not going to spend a lot of time on that. I just wanted to emphasize that because so many people will buy a stock and just forget about it. And that is a very bad policy. Now I want to talk about what the top 50 group inclusion report is. Now, most of you who have been with us for a while, you already know this, but this is for the new people or the people who are not HGSI users. The top 50 group inclusion report is a concept I came up with a couple of years ago when Ian was still with us. Ian Woodward was my partner, and he passed away over a year and a half ago. But I was looking for a way to incorporate several of these, what we call smart groups, from not only from Ian and myself, but from other people, such as Dave Steckler, Dave Gallardi, Jeff Scott, Gil Morales, and Chris Casher, and so on. So I was just experimenting, and I came up with the idea of just using these multiple smart groups and then truncating the list at an arbitrary number of 50 stocks, and that became my top 50 group inclusion report. And what has happened over time, it has every big winner, ultimately, I shouldn't say every, but I would say 95% of all the big winners show up in the top 50 group inclusion report. So it has turned out to be a good way to prospect for stocks. Now, these smart groups, and I'll just look at the Woodward and Brown smart groups, these are made from filters and what we call combo rankings in HGSI. The combo ranking is the part which drives the stocks which are the best fit or the strongest based upon different fields in HGSI to the top of the list, and then these groups are cut off as a rule. There are a few exceptions. This LOUR, or stocks that have a chart pattern from the lower left to the upper right, every one of these is in here every day. These are generally leading stocks also. But let me just go ahead and run the group inclusion report from today using the intraday data, and you can see how it works. So to run the group inclusion report, and I'm using the small icons. If you have HGSI and your icons are a lot larger than this, that's because you have not changed to the small icons, and that's under preferences, and I use the small toolbar. I can just get more information on the screen. So I'm going to run the group inclusion report from today, and I will clear anything on here, and I'm going to load the selection. When you load the selection, it goes to a folder within HGSI, and it's number one. I have a long side and a short side. Primarily using the long side, very few people short stocks that I know of. There are people who do short, but as a rule, people do not short. So we're going to concentrate on the long side. When people want to get short, they use inverse ETFs and things like that. So what happens here is this file which I just opened, it goes in and selects different smart groups from these different people who are associated or have been involved with HGSI. Here's Steckler, Ghilardi, Ian and myself. There's a lot of Woodward and Brown files in here. Jeff Scott, Morales and Kasher, and so on. And then there's industry groups up here. Now I noticed when I was preparing for this today, there is a new industry group. It's called chemical distribution. I will fix this in my next file download, but for those of you who want to do it, I just select the chemical distribution and save selection. It's not going to make much difference because these are just reference groups when I run the group inclusion report. Now I said this is going to get a little bit complex in the beginning. Just bear with me here, but the people who have been using HGSI know how to run the group inclusion report. It's very, very simple. For those of you who are just sitting in on this, it may seem complex, but it's not. Okay, I'm going to say okay, and I'm just going to run this group inclusion report. And remember, this is from today. So as of, I did this about 10 minutes after 3 Central Time, and these are the stocks which came to the top of the list today. Notice it's dated 8/11 rather than 8/10. That's because I used the intraday data. And notice that Court, which has been very strong recently, they had a good earnings report, then it sold off for 2 or 3 days as profit takers set in, and today it rebounded. I believe it formed what's called an inside day, and we'll take a look at it. But it is showing up in every one of these smart groups as of today. And notice in particular that it's showing up in stocks and groups moving to the upside, both the regular one and the $1 to $15. Now I'm going to come back to this group, and you're going to see what I'm doing with these groups here in the future. Now here's ETSY. This is something we talked about the other day, and it's a stock that should have been taken because it started moving up. Unfortunately, I didn't take it. Here's Brinks and Align, HIIQ. It's been very strong. People have been in and out of this one. Alarm has been moving recently. And anyway, this is the list from today. And I'm going to refer to my notes for here for a second. And I want to point out that the best of Woodward and Brown is one of the smart groups in the smart group under Ian Woodward and Ron Brown that is 10 stocks. It consists of 10 stocks which appear most often in the Woodward and Brown smart group. So a lot of times these stocks in best of Woodward and Brown go on to be the leading stocks. And let me just show you this if I can. I'm going to just go ahead and run what we call the group inclusion report again, but I'm going to clear this. And I'm just going to go into my user groups and go into best of Woodward and Brown, and I'm going to select all of these stocks beginning in January. Now I maintain this database every day. I add these manually to these groups of stocks. Why? Because for webinars and things like this, where I want to make a point of showing that something works, I have to have a historical reference, and that's why I do it. So I'm going to check the children, which is going to check all of the groups underneath, and then I'm just going to say okay. I don't want to use a filter here. And let's see if I did this correctly. And this is an example. Now, I am not filtering on the list today. I just want to make a point that AMAT, for example, started appearing in the best of Woodward and Brown clear back, and this was 2017. I don't have 2016 loaded on here, but back on the 11th of January, Applied Materials was appearing, and it appeared multiple times. Now, notice that it has fallen out of the list. That's because it corrected. But many of these stocks, and NVIDIA has been a great stock. Their earnings report came out yesterday, and even though they beat and they raised guidance, there was profit taking in it today. But notice that this was appearing back on January 24th, 25th, 26th, 27th. When you see stocks like that appearing over and over, these are some of the leading stocks. AAOI was a great stock, but they disappointed the other day. They put out a press release a few weeks ago or several weeks ago that they were going to best earnings, and that drove the stock up, and it got up to the $100 area, and then it collapsed down into the $60 area. But that's not the point. This is the point. It was showing up in the best of Woodward and Brown. Now, a lot of people think just because it's showing up in the best of Woodward and Brown, aren't these stocks already overbought or extended? Not necessarily, and you can see that here. AVGO was the same story. Back in January, I don't want to beat a dead horse here. I'm not a dead horse. I just don't want to overemphasize this. But often the leading stocks are going to show up in the best of Woodward and Brown. Here's Momo, Facebook, Baba. Baba's going to report here next week, I believe, late next week or early in the following week, and it was down a little bit today, but it has been appearing in the best of Woodward and Brown for a long time. So if you want a group to go to just to check out, and you should check it out every day, a lot of these stocks that appear in the best of Woodward and Brown continue to move up. Now, obviously, you want to catch them relatively early if you can, but if they're in a strong trend, there are always opportunities to get into these stocks. Now, I'm going to do something here that you will never have to do, but I want to see if I can do this without messing it up. I'm going to, I thought I ran the group inclusion report, but I guess I didn't do it. Let's run it for today. So what I'm going to do is run a group and inclusion report from today. I need to clear everything. If I did run it, I didn't label it, so I'm just going to run it again. So I'm going to load the selection, the top 50. It's just easier for me to rerun it. And I am going to make a group from the report, and this is going to be the 11th. Now, I will put the official top 50 in my files tomorrow for those of you who are in the Insider Club, so don't worry about this. This is strictly for demonstration. So I'm going to create a group of the top 50 from today's data. I think I ran it and I didn't create the group was the problem. Okay, I do not need an index. Yeah, I ran it. Of course I did. This is what I've been talking about. I just failed to make the group. Okay, so let's go in and let's, what I'm going to do here, and like I said, you'll never need to do this. This is strictly for demonstration purposes. I am going to go into the warehouse, and these are the stocks which made the top 50 today, and you can see that they are all up because this is the percentage price change one day. I'm just going to go to a different view here. These are my new files, and I am going to save this list of symbols. And I'm just going to put it in my download folder. It's the top 50 group inclusion report. So I'm going to save that. Like I said, you'll never have to do this unless you want to. So don't get confused about this. Just stick with me. And now I'm going to go into my designer. And I'm going to go to my filters. And I'm going to what I call my group inclusion report filters. And here is a filter that I just created today. It's a symbols list top 50 group inclusion report. I'm going to edit this. And I'm just going to clear the filter. And I'm going to load that list that I just created. 811 top 50 group inclusion report. 50 securities were loaded. These are the symbols which I created in the list. By creating the list, I now have the top 50 symbols. And what I want to do, the reason I'm doing this, I want to show you that just because many of these stocks are in the group inclusion report today, that they've been there before. So I'm going to click on the group inclusion report. And after I do this, all these steps will be eliminated. So I'm going to clear all this, and then we're going to get into my new files and so on. So what I'm doing is going into what I call my non-index groups. I'm going to use the applied filter. This is the filter that I just created. Symbols list, top 50 group inclusion report. And I'm going to go to the top 50 group inclusion report for the year 2017. By checking the children, all of the group inclusion reports are going to be selected. And what I'm doing here is I am going to show you that these stocks have appeared multiple, not all of them, but most of them have appeared multiple times in this group inclusion report before today. And you can see that AMAT, did I do that correctly? AMAT's not in here. Yes, it is. So AMAT came up today. Sorry about that. I thought I messed it up. Okay, so AMAT, which I talked about earlier, is reemerging in the top 50 group inclusion report as of today. Let's go take a look at that chart. And you can see why it was not appearing in the group inclusion report for several days, because it formed a double top here and it sold off. But here it is reemerging today. So it appeared in enough of these smart groups today to make an appearance in the top 50. Volume was decent after the selling volume yesterday. The volume point of control, which is down here in this window, turned green. This would be considered an inside day, and it closed at its daily high. So this is a stock that is worth watching on Monday if this market can hold together. I want to talk some about these VPA flags. I'm going to try to incorporate all of the strengths, or I shouldn't say all of them because there are many, but many of the strengths of HGSI into this presentation as I go forward. Let's go back here and look at some of these. Down here, when it came down and hit the 100-day moving average, you can see that there were multiple VPA flags here. Yes, there were some negative flags on the way up, but when it starts moving up here, the VPA represents what happened that day. And on this day with the yellow diamond, high volume down bar after an up move on high volume indicates weakness. I'm reading over here to the left. It indicated 1-day weakness. You can see there was a little hesitancy there and some profit taking, but the movement was up. Here's another one, same signal. Now this one here, it looked like it was going to go higher, an effort to rise. This is why we control risk. This stock had this been purchased at this point, and it probably wouldn't have been because it really didn't clear the high enough, but you certainly need to have risk control in place or you're going to ride a stock like this down. But I don't want to get too bogged down in this. The point is this is appearing again in the top 50. Let's look at some more. Here's WB. This started appearing back in January, and it is appearing today. And look at this. Let's go back to the 1st of August. Here it appeared multiple times. Here's Court. This one started appearing well in late July, and then it held off a while. And look at this, several occurrences. SUPN was out to a new high recently. It faded, and that was back in July, and it's starting to appear again. HIIQ, this GIR one, this is something I ran earlier, I believe. Just don't pay any attention to it. I'll make sure that's not in there. But you can see that this started appearing on, let's say consistently about the 24th of July. So this is why the group inclusion report is an excellent tool to look for prospects, and that's why I use it It's one method I use, and I would say it's my primary method. Now, in addition to what I'm going to do is I'm going to get into some of these scans here, and I want to run a couple more group inclusion reports before I really talk about these. Well, actually, let me describe this, and then I'll go run the group inclusion reports, and then I'll come back to these. But there is a feature in HGSI that probably very few people know about. It's called a group member feature. And let me just show you the filter here. And here's my filter that I use, and you can see it's fairly complex because what I'm looking for are stocks that have had any of these VPA flags, and some are signals, some are descriptions. It's when I put the filters together, I had to go in and look at the conditions of the filters and see which words were contained in either the condition or the description. And that's how I came up with these filters. And I want a 3-day window on this. So I want to see stocks that have had a VPA flag, a positive VPA flag over the last 3 days. They're assigned to a group, and they belong to a certain group. Now, this is where the group member comes in. What this allows us to do is go to specific, or limit the searches to specific groups. And in this instance, I am using the leaders, the raw relative strength, raw combo. These are stocks that have high relative strength and generally high group strength. They are determined by a combo ranking, and these are generally, while they're always very strong stocks. So what I've decided to do with this release of my files is to help us find stocks that meet the criteria, not only in the raw relative strength, but also in the stocks and groups moving up and the stocks and groups moving up smart group 1 to 15. So these are the group member stocks. And down here in all of these other folders, and I'm not going to get into these other folders, you can think of most of this as inventory and experimentation, but I do use them occasionally. This is where my emphasis going forward is right now, though, with the featured bullish prospecting scans. Now, what I want to prove to you is that these have value. The raw relative strength combo and these stocks and groups moving up, and this is to help us quickly, or more quickly, I should say, find candidates that we can possibly trade to the upside. Okay, but let's first, before I do that, I want to go back and run a couple of more group inclusion reports, and then we're going to go down this list here with the top 50 group inclusion report, and I'm going to point out how these filters work. Okay, all right, let's get back to this. So I'm going to run the group inclusion report again, and I'm going to continue using this filter, but I'm going to clear these out of here. And what we're going to do is we're going to look at these groups that I suggested. We're going to look at the stocks and groups moving up, and both the regular stocks and groups moving up and the stocks and groups moving up in the $1 to $15 range are included in here. So I have to check the children to make sure they're all selected, and I'm using this applied filter, and I'm going to run this, and we're going to find out how many times the current 50 stocks appeared in the stocks and groups moving to the upside. Now, if you look here at WB as an example, you can see that it started appearing back in January multiple times. and it appeared a total of 64 times in the stocks and groups moving to the upside. ATHM, which is hot right now, started appearing in January, and then it didn't appear all that consistently, but notice that it started appearing in August, on the 3rd of August. Royal Caribbean, Weight Watchers. This has been a really strong stock lately, and look how it appears in these stocks and groups moving to the upside. Bank Rate is in here, Boeing, and so on. I'm not going to go through all of these in depth. I'm just pointing out that these stocks do appear in these smart groups. Now I'm going to do one more, and then I'm just going to get into the actual screens. I'm going to clear this. I'll just collapse everything here. And I'm going to do the raw combo stocks smart group. And I'm going to check the children, which means all of the groups are selected. We're going to see if these stocks appeared in this smart group. I know they did because I did this earlier today. Now you can see that L and TH has appeared 106 times in the leaders group. It's called leaders raw relative strength raw combo or raw group rank combo. Started appearing in February, and it has appeared multiple times. Let's see, it started appearing many times in July, and it's appearing through yesterday. Weight Watchers, I just mentioned Weight Watchers. I'm not familiar with this stock, NVCR, but it's appeared multiple times. Pet Med Express, Kite Pharma, Auto Home again, Brinks, Alcoa has been appearing. These are the stocks that belong in this leaders group. Okay, now I've done enough group inclusion report stuff. I probably bored you to death, but I'm just trying to prove a point that these stocks appear not only in the top 50 group inclusion report multiple times, they also appear many times in Best of Woodward and Brown, and they also appear multiple times in stocks and groups moving up and the top raw combo stocks. You can see why I maintain this database. I have to go back and see when this occurred. Now let's actually get into, I shouldn't have closed that, I want it, to the top 50 today, which is using the intraday data, and I'm just going to start up here at the top. I have a folder in my files called Featured Bullish Prospecting Scans. I've spent multiple days trying to give us some of the best approaches to help find the best trades. Now these are scans that I had before, but I've added one to this because so many people like to only look for stocks with earnings growth. That's fine, because if that's your criteria, it doesn't make any sense to look. Well, it does make sense to look at the other groups, because a lot of times you're going to find stocks that are moving in groups and their earnings are terrible. By limiting yourself to earnings only, you do miss a lot of opportunities, but that's a personal choice. Anyway, here is one, and I'm going to go through these quickly and get more down into here. Quality momentum scans, 85 stocks. This is similar to something that I had in HGSI a long time ago in one of our Woodward and Brown smart groups. It's just the 85 stocks. And let me change this view up here. Well, actually, that's fine. They're right. It's right here is what I'm looking for. You can see that if you go down the EPS rank and the relative strength rank, these are stocks with high EPS ranks and high relative strength ranks. Now, you might say, if you don't know, how do you rank your EPS? Well, it's based upon slope, the slope of the earnings per share and the standard deviation. So let me bring up the top stock. And this stock is at the top because I have a combo in here, and it is called Strong Momentum Intraday. And I better show that to you for the people that do not know what a combo is. A combo is essentially, it's a weighting of fields which are available in HGSI. And I use this, I weight the intraday range, or where a stock is within its intraday range, the intraday change of price, and the intraday volume compared to the 20-day moving average. I weight all of them equally at 33%. And what this does, it does a nice job. As you can see that I'm sorted on raw combo rank. This is the best fit stock for that combo based upon those three fields. And you can see Real Page was up 4.86% today, and it closed at 100% of its daily range, or at least within 5 minutes of the close. And the volume was heavier. Excuse me, I'm going to take a drink. The volume was above normal. Now I had based on the 20 in the combo, but this is the 50. Still, that could be switched out, but it really doesn't matter. So let's look at the stock. Now this stock is in an uptrend. It's a loose, pretty loose stock, which I do not like. Back here, notice how much tighter it was over here in this area, and it was tied up through here, and then it corrected, and now it is a pretty loose stock. But it met the criteria, obviously, for the 85-85. When I open the fundamental window right here, here's the EPS rank and the relative strength rank. Now, I said that the EPS rank is determined by slope and standard deviation, and this is a pretty smooth slope, and the standard deviation of the blue line is not that great. So consequently, it ends up with a high EPS rank, and the relative strength rank is a comparison to all of the other stocks in the database, and this stock based upon relative strength, which is based upon a 1-year period, with I believe 40% of the emphasis on the last quarter. I haven't looked at that for a while, but I think that's correct, and the others split over the other 3 quarters. This stock is a strong relative strength stock, and it has a 93 out of a 99. So it is moving up. Now, I am using a view here which does not have the group line in it, so let's switch views. Now, this has the group line in it. It's view number 2, and the reason that, if you've listened to me before, I'm always harping on group strength and what the group is doing. And if you look back here, this stock was in sync with the group through here, and then it sold off. I don't know if this was a bad earnings report or what happened to it, but the group kept going up, and then it chopped around here, and it's really not, well, it's still 77, but you know, it's kind of going sideways. So the group, it looks like it turned up today. This is application software technology. What we have here is we have an effort to rise on pretty heavy volume. I don't like the stock though. I don't like this resistance in here, the looseness, but that does not keep it from coming up in the screen. This is just my personal opinion. Somebody else probably loves this stock, but you know, that's what you have to determine. If you love it, make sure that you know your risk, and you could you know, trade it if you like. Let's go through this one. Now here is a beautiful tight stock. Notice the difference. See how tight this stock is? And look at the group. Even though the group was bouncing around doing nothing, this stock had an upward bias to it. And it had multiple VPA flags in really good spots. Now here's an effort to rise, and then it was followed by a couple of negative VPA flags. But notice that this stock hugged the 18-day exponential moving average. Personally, I use the 200, the 100, the 50, and the 18-day exponential moving averages to determine if a stock is in a long-term uptrend. For shorter term and entries and exits, I use the 3, the 6, and the 18, and I'll show you one of those charts here pretty soon. But this is the kind of stock that you're looking for. Why? Because it's not all over the place. And this was an excellent buy point right here. This was an effort to rise. Notice that volume was coming in at the same time, and there was a one-day dip in the volume point of control, and then it reversed itself and it took off. And earnings came out here. This is another effort to rise. A lot of people are afraid to buy stocks when they gap up, but if the earnings report is good and you put a stop in below the low of this, you know what your risk is. And this stock has just continued to move from that earnings report. Now the earnings just came out. We show 317 up here. Our earnings are updated from Zacks on Tuesday night. They update all of the earnings fields that night, so that information will appear here. But I just happen to know when the earnings are up, I use Thinkorswim to stay current on earnings. But this is a result of earnings. Now, notice that how strong this particular stock is. It is trading contrary to its group, and this is internet-based services. Yesterday, you all know that we had a terrible day in the market, and today it kind of reversed itself. But this stock is on a tear now. Now it's getting a little bit extended from the gap, but somebody like Gil Morales will buy a stock like this, and he'll buy it and put his stop in just below the low of the day, and he knows his risk. But what I'm emphasizing here is not only that, but the tightness of the chart. Try to limit your trades to the tighter charts if you can. Now here is Ultra Clean Holdings, UCTT. Notice how tight it was here, and it followed its group. And then the big reversal here with the VPA flags. You can see it was under accumulation with these flags here, stopped right around the 100-day and moved up. More VPA flags. Here's an early warning, but here's confirmation. Came back down, and it's holding it here, and now it's being reaccumulated. Just because a stock gets loose doesn't mean it cannot tighten again, because they often do. Now this one, I am prospecting in the top 50 group inclusion report from today. This one was a great stock. The earnings are out of the way. The earnings were excellent, up 520%. This stock, even though it's loose, with the group turning up and multiple accumulation days here, this should go on your watch list. Auto Homes might be a little too far gone now, but it can go on a watch list too, because if it pulls back, there may be an opportunity to get into it. So, Real Page, I don't like because of its looseness. Auto Home, a little bit late. Ultra Clean Holdings, put both of these in a watch list. I Am Gold Corporation, you can see the group is down here with a group rank of 18. It's outperforming its group. A little bit sloppy. There's been some fear in the market, obviously. Some money has been flowing into gold. Not crazy about it, but it's an 85 stock. Let's look at Thor Industries. Now this has done nothing since this buyable gap here. And this buyable gap could have been stopped out of the following day, but then it held, and we're starting to see some VPA flags here. This is a test for supply, low volume test. That's often a very good signal, but really the stock has done nothing. And this is a recreational vehicle. They make, well, you've seen their RVs and so on. I don't like it because of the group primarily. It's a group rank of 91, but I look at this group line here for recent activity, and you've got a lot of resistance over here. Yes, it's under accumulation. It's just, I'm just not crazy about it. Now, AMAT I talked about earlier. This was a great tight stock, and then the shakeout here, it was tight here, another shakeout, didn't quite get down to a double bottom here. I would put this in the watch list. Semiconductors, I think, did okay today. Chemet, whoops. This is a stock that several of us were in. I think some people are still in it who have taken the webinars. Now, this stock is a 98 and 99 relative strength, which means that Chem has outperformed 99% of the other stocks in the database. And it went through this consolidation area here, held at the 50. Here's a low volume test for supply. Here was another one here. Yesterday it held up pretty well in that downdraft, but you can see that here's the low volume, but it closed near the high of the day. So it is setting up. I would put this in a watch list also. I'm not telling you to necessarily buy these, but I'm just looking at these charts and trying to show you what I look for. Now, I don't want to spend a whole bunch of time on all of these. This is something you can do on your own. I hope you're getting a feel for what I look for. Okay, this is a quality momentum scan. These stocks, the biggest difference here is that these have to be up at least 100% already over the past 12 months. Why would I have a requirement like that? Because a lot of these stocks that are up 100% continue to go on to be up 200, 300%. Yeah, it's tough to buy them sometimes, but just like auto, how much is this up? It's up 100, and if you look over here, it's up 182.1% from its 52-week low already. A lot of people look at that and say, I'm not going to buy that stock. It's already up 182%. Well, you can see what's happened with it the past 3 days. Now, this one, Ultra Clean Holdings, is up 267.8%. Mercury's up 118. Here's one that's up 500% already. What is this? Chem. So it's already up 5%, and I told you to put it in your watch list. But these are stocks that can continue to go higher. Now, I've got to move along. I've already talked for 53 minutes, so let's get through some of these. Speculative momentum scan, RS99 or less, $15 or less. There's none in the top 50. I'm only looking at the top 50. Now, I want to point out that if you don't want to limit yourself to the top 50, that is fine, and you shouldn't. Now, I'm going to go to all securities with this scan because I've got no candidates in here. I'm going to hold my alternate key and hit the space bar. And I did something wrong. Let's just do this. I'll go to all securities. And what do we have here? Speculative momentum. They have to have a relative strength of 99. In other words, they're outperforming 99% of the stocks in the database already, and they're already up 100% for the year. Here is one that I almost bought a while back, but I just couldn't bring myself around to it because of the looseness here. But you can see that it was a $3 stock, and it got up to the 9.5 range, and here it's showing up again. I don't like it because I think it's too loose, but this is the kind of stock that's showing up. Now, here's one that was up 15.35% today. It's kind of a neutral chart. got up here, rolled over, and kind of with the group. You can see we're getting some VPA flags on it. The earnings are out of the way because the next earnings date is 11/18. Specialty pharma, it's always a group that stocks can move rapidly in either direction. It's got a lot of overhead resistance here, but there was some interest in it today. Just I would put it in the watch list just to see what happens, see if it firms up. Problem with a stock like this is if you look across here, there was absolutely no revenue until the March quarter, and if you go look at the current earnings or revenue, you'll probably see a little bit of revenue here, purely based upon what is coming in the future. No question about it. High risk stock. Here's AVEO. This is a biotech. Look at all these VPA flags or bullish VPA flags as it held. It's a little $3 stock after a big move up. It's holding. It's got some revenue here, revenue growth. Earnings are negative, but they're getting better. High risk stock, no question about it. Anyway, I don't want to spend a lot of time on that. Let's go back to the top 50 group inclusion report from today. Quality, momentum, and fundamental scan. What's a quality, momentum, and fundamental scan? Well, you have to look at the filter to find out what I put in there. And there's not a lot of criteria in here. It has to have a net profit margin of at least 10% and return on equity of at least 10%. And that's really the only criteria, and they have to be 50% off the 52-week low. So this gives them some fundamentals. My other scans, I'm really not looking at the fundamentals. Now, what comes up in here? Same stocks, ATHM, Chem, MKSI, AMAT's coming up. Form, which is another semiconductor manufacturing. Here's SUPN. There's Court again. So a lot of familiar names in here. Now, this is the same thing except more liquid stocks. I required 750,000 shares per day to be traded. Is there a difference in the group? This has 13. This only has 10. So it eliminates some. And then this one is EPS and revenue growth with rising earnings estimate for the current quarter. And you can see that 31 stocks in the top 50 group inclusion report passed this test today. So let's take a look at the filter. I didn't require anything very stringent at all. And the reason I do not like to make these filters real stringent or limiting is because it eliminates too many stocks. Let's say you put 25-25 on the, and I do have filters which require this, but this one I chose not to. What if you have 25-25-25-25 on the revenue and the EPS change and the projected? All I'm looking for is growth here. If I have those requirements, the higher requirements, I am not going to see these stocks if these numbers come in at 24, 21, 19, something like that. So why not open it up? And we know that there is growth, but you can come over here and look at this side of the warehouse view. I put this information in here for you, and you can see what the EPS change is. For example, right here, what if I required 25%? I would not see Auto Home. And you saw what Auto Home is doing as a stock. That's why I left it at 0. And the EPS previous was 20.5. It would not have shown up. So I prefer to do it this way. But all the information is right here, the projected earnings per share and so on. Why not look at them in the warehouse view? Why limit yourself? Now, every one of these stocks was up today, as you can see. Okay, now that's all the momentum scans. All of these other scans that I put in here serve a purpose. I want to know if these stocks are in a bullish long-term uptrend. And I already pointed out to you that they have to be above the 18, the 50, the 100, and the 200. And you can see that 44 of the 50 are in bullish fans. So we're looking at some long-term strength here in the top 50 group inclusion report. Now, this is one of my primary prospecting tools. VPOC, volume point of control. The 1010 is positive, but down from a 1 or 2 day swing high. Now, let's look at AMAT. Now, AMAT is not, yes, it looks like it still is. I'm sorry. I take that back. The 18 has not crossed below the 50. So it is still in a long-term uptrend because everything else is in place. Now, the chart that I use for this, it's called the high-low trigger under featured charts. And what I'm looking for is a green bar where it's pulled back from a little bit from the high. Now, the problem here is this stock is really in a short-term downtrend, so you need to be careful. But it meets the other criteria. The volume point of control has turned from rose to green, and on good volume here, and it closed near the high of the day. I probably would not take this stock yet, and the reason I'm saying that is because it's in a counter trend move, but that's strictly a personal choice. If you do take it, your stop would have to be below the low of the prior day here, which is the lowest low out of this. But it would have to take out, I would require it, and let me zoom in on this a little bit with my alternate one key. I would like to see some more convincing here. It would have to take out the prior day's high by a few cents before I would want to get into it. And I would put my stop right down here, and I know how much I'm going to risk on the trade. A lot of people like to trade these stocks, and you really should not be afraid of them. As most of us know, we came from that background where we're used to buying breakouts, and I've gotten away from that because a lot of them fail. You just have to be willing to take these stocks as they pull back. Now let me go to a different chart here. I'm going to go to the next one down. It's chart number 4, and this is the 3, 6, and 18 high-low trigger. Now this is the 3 crossing the 6 to the downside. It's very hard to see right here, but it happens right there. And then the 3 has not crossed the 6 yet, but if this takes this out, then it probably will. But the 18 is still going down. In my opinion, it's much safer to wait, but you're going to miss out on part of the move until the 18 has been crossed and the 3 is above the 6, and then it had a nice run here, and you'd be getting out of it about here. Personal choice, though, depends on your risk, but it meets the criteria for this. Let's look at one more stock in this, and then I'll move on. Now this is MKSI. You can see it's down from the previous day's high. It is setting up. The group has been going down, but it turned up today. It's got a little bit of overhead resistance here, but it is setting up. Once again, I would require it to take out the prior day's high by a few cents, put a stop just below here. I want to see it going up. I don't want to just go in and buy this stock. I want to see it going up. Okay, just a second here. Okay, sorry about that. All right. So that's my primary primary method of prospecting, looking for stocks that are pulling back from a swing high. I prefer stocks that are really in a strong uptrend. Now this one, VANTI, Consumer Finance, I'm not really familiar with this stock. This one, you can see it pulled back from the high. It's too far extended at this point for me, but it meets the criteria. That's why it's in here. It's a judgment call. Let's take a look at form factor. I don't like that one. It's too loose. I just flipped through these. Now this one is kind of interesting. It's a specialty pharma. I said that other one was too extended. This one's extended too, but this is a little bit different story. It moved up very sharply, and it's been going sideways for 3 days, and it closed near the high of the day here. It's pulled back from this high a couple of times. You're going to have more risk on this stock, because I would have to put the stop down below the low of this particular, because it's the lowest of the 3 days, and it would have to take out this high here. Now, that may be a pretty scary proposition for most people. But the point is, and I hope this is coming through, if you define your risk, you know exactly how much you can lose. And it's more important to me to know how much I can lose than how much I can gain. And that's the whole point of determining your risk beforehand. Okay, now this is a much nicer looking stock here, Alarm. Look at all of these instances of the green bars here, where it traded higher coming out of a green bar. Here it didn't until, well, about this point right here, and then it went up, and then there was a shakeout. Here's another buy point here, and this instance right here, by the way, this should go on your watch list. It is pulled back from these two highs, and this is a little bit trickier to determine if you want to take it or not, because there's resistance up here. But we know yesterday was a really bad day. It tried to go, and it was just beaten down by the market. So I would, if I were to buy this, I doubt if I would wait for it to get clear up here. This is highly subjective. It's up to you. I would require it to take out the high from today, and I would put my stop below here. And this is a hammer here on the candle, but this should definitely go on your watch list. The earnings are out of the way. The next earnings date is November 13th. So you can go look up the earnings, either Yahoo or, by the way, for the newbies, more info from the web. You just right mouse clicking, you can go to any of these sites and get the latest news. But this is a stock I like better. Why? Because the 3, 6, and 18, they're all they're headed up. Here was an excellent buy point right here, but I think this was earnings day, if I'm not mistaken. You can see there's a long leg. It almost was a doji, but it's a spinning top. A lot of indecision right here, but I'm looking past that. I'm looking over here, and I like this stock. In fact, consumer discretionary, I would certainly put that in a watch list. I gotta keep moving here. These are the same ones above the 3 and the 6 day, what I've been talking about. Here's a bullish VPA flag the last 3 days with the long-term fan up. You can see that every one of these were up. If you look down this column right here, it tells you the days since the last VPA signal. And if you sort on this, all of these had a VPA flag today. If it's a 0, there was a flag today. Another thing you can do is you can sort on the industry and see if there are multiple stocks in the same industry group. I'm not going to go through those because I'm going to be running out of time, and I want to get down to these other groups. These are pretty self-explanatory. This one here, though, I do need to talk about. VPA, bullish VPA flag the last 3 days. Fan In other words, the fan is in place, but these are stocks having what I consider a counter trend. The 3-day is below the 6. Here's real page. I'm not going to look at that, or Thor or MKS. Let's look at form factor. Form factor, and let me zoom out so we get a longer perspective on this. You can see it moved up, and then it came down hard, but it came off the low, gapped up, and it is holding after a couple of low volume tests for supply, and then the VPA flag here, high volume up bar today, closing on the high, near the high, indicates strength. Volume was up a little bit, and it's holding. Earnings are due not until October, so earnings are out of the way. You have this short-term resistance. Semiconductors, the group has been going down, but it's holding here. Why is this a counter trend stock? I'm going to zoom back in. Only because the 3 is below the 6, but it's above the 18. The 18 is the red line, and the 3 and the 6 are very close together, but the 3 is slightly below the 6. So it is a counter trend. Let me see if I can find a better example. Okay, SUPN. Here is the 6, and here's the 3, and it's below the 18. The 18 is not factored into this, the 3 and the 6. This is a counter trend because the primary trend, if I go back up to my #1 view, the primary trend is still a fan up. So when I go down to the 3, 6, and 18, it is a counter trend move. Now, I believe Gil Morales, what does he call this? An undercut and rally, something like that. And these counter trend stocks could be considered the undercut, and you're hoping for a rally, but you let them come to you. You don't just go in and buy them. You let them move up, and you get stopped into them. But this view, these have had a bullish flag the last 3 days. In fact, all of these, well, right here is the days since, and they are in counter trend mode in the top 50. So these could be considered the undercut and rally. And while they're not rallying yet, but they're undercutting. So it's a potentially lower risk trade because you're not chasing breakouts. Now let's get down to these right here, and I'm going to have to talk about these, and then I'm going to have to end this, but I'll take some questions if there are any. Bullish flag the last 3 days, stocks and groups moving up, smart group. So what do we have here? We have stocks that are in the top 50 group inclusion report today, but they're also in the stocks and groups moving up, smart group. So we're getting really double confirmation. And let's see if there's any in the 115 form factor, which we looked at. So all of these stocks in the top 50 are also appearing in these stocks and groups moving up, smart group. And by the way, if you go down here to folder number 19 and you look, there are these views which I'm showing up here, but there are several others which are in, they're tagged with smart groups. And if I have time, I'm going to talk a little bit about this inside day smart group here. Oh, I guess I have it up here. Okay, so let's move on. There's stocks and groups moving up. By the way, if you want to get out of the top 50 GIR, fine. Just go to all securities. Now, all of these appear in the raw relative strength and raw combo smart group. And auto home is in there. There's our YRD. Look at this, moving up nicely. Let me Zoom out on this. Sharp correction. Entry point here moved up nicely today. Control 4 Corporation. This one's actually setting up very nicely. Earnings are out of the way. I would definitely put this one in a watch list. It's consumer electronics. Don't like the group, but it turned up a little bit today. But this stock is forming a short-term rounded bottom. Here was an effort to rise. The volume point of control turned positive. I would definitely put this in a watch list. WB, earnings out of the way. A little bit sloppy in here is a low volume test. Put that in the watch list too. Weight Watchers, this stock has been a wonderful tight stock for a long time. Here we had a little bit of correction, but there was so much. When you see a tight stock like this, why is it tight? Because there's so much demand for it. Because the buyers do not let it fall very much. Okay, that's why you'll see a tight stock. There is a kind of a consensus of opinion. That's the way I look at it. And then there was a correction, and then the earnings came out. And look what it's done recently. Might be a little bit late, but it's worth putting in a watch list. Now here's what I consider more of a neutral chart. Not real loose, not real tight either, but kind of setting up. And where is it? It's in the top 50 group inclusion report, and it's also a raw relative strength stock. Let's look at the numbers here. The relative strength is 97, the group rank is 84, but the primary consideration is the relative strength. I would definitely put this one in a watch list also. Earnings are out of the way. It's holding up all right. Here was a shakeout, but it reversed and closed near the top of the list. Okay, let's move on. So these are important. If you want a quick read, if you don't do anything else during the day, if you run your group inclusion report, apply these groups to it and look at them. Look at the stocks. Now, these are growth stocks, and they're in the stocks and groups moving up smart group. Now let's see what the difference here is. This time, I did require an EPS change of 20%, greater than the same quarter 1 year ago, and the same for the previous quarter. So here I'm putting these arbitrary numbers in. I explained to you that in the under the momentum stocks, I did not put these numbers in because I don't really like the arbitrary cutoff points. But in this instance, I put them in because a lot of people like to see these numbers. But see, it's a group member of stocks and groups moving up. So what do we have here? We have stocks with at least 20% earnings growth for the last 2 quarters, and they're in the stocks and groups moving up. And there are a lot of good stocks in here, a lot of stocks that have been moving. Now, this stock came out with really good earnings the other day. It had a nice move up. It's pulled back. A no VPA flag here, but I would put this in your watch list also. Here's your earnings up here. Okay, now here's the same thing. Growth stocks in the 1 to 15 group if you like to play the less expensive stocks. And here I'm going to finish with the inside day. Now the inside day is a concept that can be traded all by itself. I mean, if you want to trade inside days, but you don't want to just trade any inside day. Let's take a look at, well, let's look at Court. I've talked about Court a lot. This is an inside day. Why is this an inside day? It's because the entire range of this stock today on Court is inside the prior day's body. That's why it's an inside day. You can also see that the 3 is above the 6, above the 18. The group that's been going down the past few days, this suffered with it. Group turned back up today, but it's showing an inside day. Now it's just like buying the IR. the impulse reaction. You want these stocks to prove themselves. So I would not buy this stock. I was in it, I sold it, but I'm considering getting back into it, but I'm going to let it come to me. I'm going to make it take out the prior day's high plus a few cents, and I'm going to put a stop in here. Why? Because I think maybe it has some more room to go. It got up to the 15 range, and it's an inside day, and I want to show you something else here as far as charts go. If you go down here, here's what we call a visual filter back test for inside days. And I put a chart in here, and what the visual filter back test does, you can tie filters directly to a chart. And what this allows you to do is go back in time and look at other inside days and see if they worked or not. Now, the thing is, I said that you don't buy these things unless they prove themselves. Back here, this was an inside day inside the range of this prior day stock, but yet it didn't take out the high. So you wouldn't be in that stock. And this one was an inside day of this one, and it didn't take out the high, and it went down. So that inside day did not work. Now this inside day did work up here for a day, and this inside day was a failure. This inside day here, you wait for it, you buy into it, and that was a really good trade. So this is down here. There's three different charts here, positive and negative. The negative inside days are black candles, and the positive inside days are white candles. But the inside day, you have to let it prove itself. You don't just go in there and buy them. Preferably, the stock is above the 3-day moving average. The close is. In this instance, it is, and the buy point would be right up there with risk determined. Let's see if I can find another one that I haven't looked at. Have I looked at YY? Now this is a beautiful example of inside days. We'll just finish on this one. Here was an inside day. It was good for a while. It moved up. Here was an inside day which did not prove itself. It just drifted sideways. But right here, it was above the 3, which is the dark green line, and it took out the prior day's high. It moved up. Here's another inside day. This inside day, you'd be in it. If your stop was too close, you'd be stopped out, but more than likely your stop would be down here. Here's an inside day, which was a buy a couple of days later, and here's an inside day that also worked. So the inside day here, now because of yesterday's price action and that very heavy volume, this is a little bit trickier. It's up in the $80 price range right now, and it traded down today. I would not take this stock. I certainly wouldn't wait for that to clear. That's too far. But if I were interested in buying this, it would certainly have to take out today's high with a stop more than likely below today's low. These long wicks here, they're just too far away. You're assuming too many risk, or you wouldn't be able to buy any shares at all. So anyway, I've talked an hour and 23 minutes already, and I think I got through most of it. But what I want you to take away from this is that the Top 50 Group Inclusion Report is an excellent way to look for stocks. Now, we're in a market right now, who knows where it's going to go. It's extended, it's really long in the tooth, no question about it. And it's a dangerous market. But if it continues to go, you should be looking for stocks, preferably in the Top 50 Group and Inclusion Report. And also, there you can look for inside days, or you can look at these momentum scans, or I am looking for stocks that are in these SMART groups. Stocks and groups moving up and the raw relative strength. Because as you saw earlier in the presentation, these stocks have a tendency to show up in these groups. And they have a tendency to show up multiple times. Doesn't mean that they're going to continue to go higher, but they show up. So you're getting a really double confirmation. You're getting the top 50 group inclusion report, and you're also making use of the smart groups. Okay, I talked a little bit long. I lost a few people, but not too many. Thank you, Steve. I'm getting close on the numbers, so hopefully I'll be able to get that transplant. Anyway, I feel great. I've got my energy back, and that's why I've been doing a lot of work on HGSI, and I didn't do webinars because I just didn't feel like doing them, to tell you the truth. But my energy level has really come back, and I feel great on the meds that I'm on right now. So hopefully this will all be behind me before too long. Okay, does anybody have any questions, or did I just cover everything that you wanted to hear? Well, thank you, Sam. All right, thanks. Try these out. And if you're not a member of the Insider Club, you can join for a month and get the files for $25, and then you can drop your membership. I don't care, but I just want you to succeed is what I want you to do, and I want you to use HGSI. Now, I covered a small portion of HGSI today, but what I'm trying to do is just narrow it down so you don't have to look at so many things here. It took me an hour and a half to explain this. You can go through the group inclusion report and apply these views and filters in 10-15 minutes and come up with some good candidates. You don't have to spend hours doing this. Okay, well, thank you. Let's shut it down, and everybody have a good weekend. It's Friday. You want to get out of here.